Don't become an accidental partnership. This is what's called partnership by estoppel, okay, or partnership, or they call a partnership, de facto partnership. To sum it up, let me tell you what that means. Don't become an accidental partner. We talked earlier about the evidences of what a partnership may be. So let's say Richard and Linda did a deal together. Okay, so Linda calls up Richard and says, hey, I got this deal. It's a fix and flip. It's going to need 150 grand. And if you put up the money, I put up the deal, then I'll manage it, fix it up, and we'll split the profits. Okay? Now, what is that relationship looking like? A joint venture, right? Just a joint venture because it is a specific scope, right? The deal's over, they're done. Joint venture's over. Okay? 2 months later, Linda calls up Richard again and says, hey, I got a deal like the last one. You interested? Oh, yeah, same terms? That's great. They do it in the middle of it. And while in the middle of it, Linda goes, you're not going to believe this, Richard. I got a third deal. It's just killing. You want to be in that one too? Oh, yeah, let's do that one too. Now, their intent is joint venture, joint venture, joint venture. But I was at a seminar the other day and I said, Richard, how's it going? Oh, yeah, I'm doing great with my partner, Linda. You know, she's out there rehabbing homes and we're making lots of money. And I bump into Linda at Home Depot. I said, what's going on, Linda? Oh, yeah, I'm doing all these rehab deals. I go, where are you getting the money? Oh, my partner, Richard. What impression are they giving me? That they're partners in a general partnership, right? So based on my assumptions, which is reasonable, I extend credit to the partnership, right, which Richard may not know about, but Linda goes ahead and uses this line of credit or materials or supplies or whatever, and everything goes bust. Can I go after Richard on the argument that this is a partnership by estoppel because they led me to believe it was one? I lent money based on that belief, and therefore he can't deny that he's a partner. Does that make sense? That's what you got to be careful of. Especially be careful of. Okay? Generally speaking, avoid general partnerships. They stink. They stink. Unless it's a JV, a short-term thing, where you're going to do it between two entities. That would be the difference. But still, if you're going to do something long-term, a longer-term partnership, there's much better ways to do it. Okay? So first, if we're going to do a long-term partnership, we want to initially meet, and similar to a joint venture, but a little more depth, we want to identify our goals, our tasks and responsibilities, the timelines for things, how expenses are handled and reimbursed, how we're going to split the profits, how we're going to communicate, how we're going to exit strategies, and then ultimately we're probably going to form an LLC. Could be a limited partnership, but in most cases an LLC can do what a limited partnership could do in the context of a partnership. So an LLC, or limited liability company, files an articles of an organization with the state, meaning there's no accidental LLC. Either you form it or you don't. You can't have an LLC without the formation of the articles with the state. It's going to have a separate tax identification number, although a regular general partnership would too if you did report separately. It would have its own partnership tax ID. It's governed by state LLC acts, and some of those rules can be overwritten in what's called an operating agreement. Now, most people, when they form things that is a partnership in an LLC, they just file with the state, but they never draft an operating agreement. The operating agreement sets out the rules that would normally be in a partnership agreement. You don't need both, by the way. You don't need a partnership agreement and an operating agreement. The operating agreement is the partnership agreement. Okay? So if you form an LLC, make sure you get a well-drafted operating agreement that addresses all the things that would be normally addressed in a partnership agreement. An LLC can be managed by members or one or more managers. Okay? So A and B, member managed. That means it's like a general partnership. Either member can do things on behalf of the company, can bind the company, and take actions on behalf of the company. That's like a general partnership because they're like general partners, but neither one of them are liable for things in the scope of the LLC business because an LLC by definition is limited liability, okay, unlike a general partnership. If you have one or more managers, they're like general partners. So let's say you had A, B, and C as members, but just A was going to be the one running things, so he'd be the manager or managing member, so to speak. And B and C were members but not managers. That'd be like a limited partnership. The managing member's like a general partner, and the other members are like limited partners. It's similar, but they all file the same tax return, by the way. It's a partnership is a partnership is a partnership. Okay? But you can structure it, differently. There's 4 ways an LLC can be taxed. An LLC does not have a tax return designated by the IRS. They never came up with one. A corporation does. Corporation's 1120, S corporation 1120S, partnership 1065, LLC, there is no partnership. There is no return. You have to choose how you want to be treated by the IRS. Now, there are default rules. So if you have one person, a single member LLC, or it could be husband and wife, they're considered one person, then your LLC is what's called disregarded. Means the IRS will just ignore the LLC form, and then the individual member, or in this case husband and wife, would report jointly on the same return. You'd report the income and expenses on your personal return. Now, depending on the nature of the income, it would depend on where you'd report it. So if you're flipping houses and wholesaling and doing things like that, that's earned income. That'd be on Schedule C, subject to self-employment tax. If you were doing rentals, you'd be on Schedule E. Long-term capital gains, Schedule D. Does that make sense? So you're reporting everything on your personal return, which is high risk of audit, and you do pay self-employment tax on earned income. If you have 2 or more persons or entities that are not husband and wife, then by default you are a partnership and should file a 1065 return, just like a general partnership, a joint venture, or a limited partnership would. Okay, the tax rules are pretty much the same for all of them. A partnership is a partnership. Now, one of the nice things, if you already have a general partnership, can you convert that into an LLC partnership? Yes, you can. If you have a limited partnership, can you convert that into an LLC partnership? Yes, you can. Yes, you can. An LLC could also be treated as a C or S corporation for taxes, but you have to elect that affirmatively on some forms with the IRS. So by default, if it's one person or husband and wife, it's disregarded. If it's 2 or more, it's a partnership. Now, husband and wife can be either way. Husband and wife can be partnership, or they could be disregarded. I prefer partnership. And the reason is, the bad news is you got to file a separate return, but the good news is partnership returns are rarely audited, as opposed to reporting everything on your personal return.